In this video, I'm going to be breaking down near protocol. Going to be showing you what I think is happening on the charts, where I think this is going, and where I'm going to be buying in. So if you like this content, make sure that you hit the thumbs up button and subscribe for more. All right, let's jump right in. So on this chart, I've got the 3-day chart. I'm on a non-logarithmic scale. And as you can see, I already have some drawings right here on the chart. And I'm an Elliott wave trader, so I like to use Elliott wave to analyze the charts. I just think it works well for me and my brain and being able to determine what's happening and create some probabilities on where I think price is going. And so I actually have a common Elliott wave pattern that's drawn on the chart, and that is a triangle. Now, a triangle is a 5-wave structure. It also is sometimes described as an ABCDE triangle, and there's a few different variations of what that looks like depending on if you're in a bull market or a bear market. And the one that we are looking at is the barrier triangle, or it kind of looks like a descending triangle or descending wedge, depending on where you take a look at different diagrams or textbook, if you will. You'll see different diagrams of what this looks like, but it still comes back to an ABCDE pattern, and it's going in a bull trend into the corrected pattern, usually correcting or accumulating and then continuing on in the trend. So you will see that there is an A, B, C, D, E that's formed, and each one of those waves is broken down into smaller 3-wave structures like A, B, C. Don't have time in this video to go into all of that, but the main point is that we have an uptrend, and then it corrects into this 5-wave pattern, which then is going to continue on in the initial direction. So to show that, we literally have this uptrend, then we have price doing an A, B, C, D, and then E pattern right here on near protocol. Near protocol is making a descending triangle, an ABCDE triangle, a barrier triangle, descending wedge, whatever it is that you want to call it. And so usually once this happens, these 5 waves happen, we will see a breakout of this range from these 2 converging trend lines. These 2 trend lines are coming together to make a point. And towards the end of that, we will see price break out, just like we are seeing right here on this candle from November 5th, which was right during the US presidential election. And usually what happens after this is that we will break above this upper trend line, and then at some point we'll kind of come back and retest this area, sometimes coming all the way back to test that line. Sometimes we make a bigger move up, and then it takes a little while to test back, and it maybe tests lower. Just depends, but I've seen both of those take place. But once we do get that retest, sometimes we do, sometimes it just goes straight up. But once we do get that break, we usually see an upward movement, and that's exactly what I think is going to happen here. The main reason why, actually there's a couple of reasons why I think this is a very good place, a potent place to enter, and where I'm going to be entering. Not financial advice. This is just what I'm doing. Do your own research, do your own analysis. But there's a couple reasons why. One is that we have this bullish engulfing candle right here. And I've been talking a lot about that in my videos recently. One, because it's showing up on the charts. We see this bullish engulfing candle, which typically is a very bullish sign. That's when this top of this candle totally surpasses, the body of this green candle totally surpasses the body of the red candle. It engulfs it. And so that usually means a sign of reversal. So we had this downtrend, and now we're reversing into a new trend. Doesn't always happen that way. It's not, that's not a 100% rule, but when we see this happen towards the end of a pattern or near support, and we get this engulfing candle, that's usually a good sign. So I like the way that this looks. A second thing that gives me more confirmation for this is the Fibonacci retracement level. So for just a second, I'm going to take off these waves and these trend lines, and we will put in the Fibonacci retracement tool. And typically where I put that in as at the bottom of the swing low, which would be down here just at about 93 cents or so, in that range, and then bring it up to the swing high. Sometimes I'll come to the candle closes up here near the high, just because these wicks are, sometimes they throw off the Fibonacci. But those candle closes are sometimes a little bit more reliable places to put that. And what you will see on this chart is that price comes back down to the 0.618 level, which is one of the most common retracement levels, especially for a wave 2. And I'll break that down here in just a second. But when we get price to come back to this 0.618 level, and you see this candle come right here to the 618 level, right here, 618, and we put in this bullish engulfing candle, it's almost like the market knows where these lines are, and it does, because a lot of people are using these tools, and there's a reason that people use them. And so it doesn't always work out that way. So this is not a tool that you can just slap on here and it always turns around at that level. But there's some different levels, and I highly recommend understanding how to use Fibonacci, extension, retracement tools, all of that, and Elliott wave in your trading. It's certainly helped me. And so with that candle coming in at this major support level, this significant Fibonacci level, I think that's another reason why we're going to see an uptrend take place from here. Now, when it comes to Elliott wave, what we typically have is a 5-wave pattern when we make upward moves. This is another 5-wave pattern, but to the upside, to the bullish direction. It can go for the bearish direction, but in this case, we're talking about bullish impulse waves. So wave 1, 2, 3, 4, and then 5. Where waves 1, 3, and 5 are all impulse waves, and then wave 2 and 4 are what are called corrective waves. And so I think right here is the start of a 5-wave pattern. Down here, we have wave 1. We have wave 2, which we already identified was that A, B, C, D, E triangle correction. Then what we would have is a upward wave 3. Then we'll have another corrective wave for wave 4. And then we'd go up for wave 5. So putting this together, we don't necessarily know exactly where all of this might lead to, but I would not be surprised if near protocol goes somewhere in this 5-wave structure, somewhere near, 15 on wave 3, and wave 5, it can go even higher, maybe even up to 20 or something like that. We've seen crypto markets just go absolutely crazy. I mean, this could be even sharper. I mean, it totally can just take off and go, even higher than that. But right here, if this were to be kind of the trajectory that near protocol goes, again, I'm looking to buy in right here because I see a lot of great fundamental and technical things with the way that this chart looks. And I would be looking to take profit no shorter than 15 or 16. And that would be up from $5. So you're talking at least a 3x, somewhere around there, but it obviously can go a lot higher. Now, I'm not guaranteeing where this could go. I mean, it obviously can go above all-time highs. Wouldn't be surprised if it does that. But for right now, I'm being a little bit more conservative and just taking a look at this 5-wave pattern and what could be reasonable for that. But of course, there's an opportunity where near protocol could go absolutely crazy and put in some really large moves upward, especially in this bull run that we are right in the middle of. So I think it could also go somewhere crazy up here. I mean, this would be wild if it went anywhere above 50 into the 70 range. But from the look, I'm now on a logarithmic chart, and using the Elliott waves, like this shape and pattern looks reasonable for that. And so, I mean, it definitely could get all the way up there. So take a look at this, make your own analysis, understand what's going on in the chart, obviously continue to learn. That's what I did. I got into this game about 3 years ago. And so I've been learning, I've been studying, I've been deepening my understanding of Elliott wave and what's going on. And I continue to see some of these patterns play out in crypto. And I'm so glad that I took the time to understand Elliott wave and just spending enough time in front of the charts to be able to make my own decisions. And I highly encourage you to do that, not just to blindly follow someone on the internet, even though I do hope that you learned from this video and can start to build your own understanding. So if you found something valuable in this video, if you like this video, if you learned something new, would appreciate it if you hit the thumbs up button and subscribe for more content like this. Let me know what you think, and I will see you in the next video.